go. Checking. Hello, how are you? Good, good seeing you. Thank you so much for coming. It was the Sundays move like the fourth Sunday or the fifth Sunday, so sometimes it schedules. That's right. Awesome. We're glad to have you. We're good? Very good. All right. Welcome, 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 welcome. My name is Antonio Sperlin. I am excited to have this awesome privilege and opportunity to share with you today. We have a guest speaker by the name of none other than Miss Gina Coleman Deeds. And so, how are you today?
I am winning. How about you, sir?
I'm doing well. Thank you so much for being with us today. On behalf of Pastor George and Judith Matthews, we want to welcome you to another exciting episode of Kingdom Made Moguls. Now, there are some of you that are here today in the sanctuary, and there are some of you online, so we want to welcome you in both places. And so we are sure you're going to be empowered today. You'll be educated today. And so today we're going to talk about life insurance. Everyone say life insurance. Life insurance. Everyone say insurance. And so great. We're going to talk about life insurance and insurance. And so Ms. Coleman Deeds is the expert on this subject. And so I wanted to start out with a few basic facts, and I'll ask a few questions in just one moment's time now. Just by way of statistics, everyone say statistics.
Statistics.
Well, allow me to ask you this question. How many Americans out of 300 million do you think have some form of insurance? And I'm not speaking in terms of car insurance because most states have mandatory insurances, but I'm speaking in terms of some type of life insurance, whether it be $10,000, what we would call a burial policy, or $100,000 policies, then you got larger policies, et cetera. But what percentage do you think, and for those of you that are online, you can participate, you can type in to the chat or make comments as to what percentage you think of Americans have actual life insurances. That's the subject for today. But for those of you that are here, everyone say, we're here. And for those of you that are here, we're going to ask, I'm asking the question openly, it's not a rhetorical question, but out of what percentage of 300 million Americans that are adult, of what percentage of the adult population, and I'll kind of tip my hands and tell you, it's about 100 million adults in this country, a little over 100 million adults. There are 300 million people in this country, 285 million, roughly 300 million, et cetera, and over 100 million are adults. Of that percentage, how many do you think are actually insured with life insurance? I'm just giving some fun facts before we get into it. Anyone? Less than 40%. Let's look at what the statistics are. You are close. This information I was able to get off of AI, and it says approximately 51 to 52% of American adults currently own life insurance. So that's a pretty good number. Would you agree? And I'm speaking in terms of those persons above the age of 21 and to any age beyond the age of 21. It says, now, everyone say more specifically. Yeah, more specifically, what do you think the race demographical differentiations are in between those race or different ethnicities? You can jump in here too, since you're the... Okay. Very good. There is a gender gap, and I'll start with the gender gap. This will kind of lighten the load here. It says that women are less likely than men to own life insurance. That's interesting to me. Okay, but I'm assuming because in some cases men are, breadwinners of their family. Some cases, I know there's cases where women are. Men want to have income left behind to replace their income in the event of a transition prematurely. And then with that, and I'll jump into this and I'll turn it over to Ms. Deeds. By way of ethnicity, it says that 58% of African Americans have some type of life insurance that are adult. I thought that was a pretty good number. It is. And it says that 52% of white Americans have some type of life insurance. And then for Asian Americans, it has it listed at 52%, and then it says Hispanics about 43%. And so with that, we can all agree that there are variations of policy coverage amounts. And so today we'll get more into that as well. And if I could just introduce Ms. Gianna Coleman Deeds to you all. Put your hands together for her. She's going to be with us today to share with us about life insurance. Thank you very much.
Okay, so good afternoon. Once again, I am Gina Coleman Deed. I am going to talk to you today about insurance, a very basic understanding of insurance. Insurance has so many different levels to it, but we're going to keep it very simple and very basic today. And of course, if you have any questions, feel free to, just raise your hand, or whenever you see me, if you have a question later, you can also contact me. I will give my contact information today during this presentation. So again, very, very basic, but if you have questions, just let me know. And thank you, sir, for that introduction as well.
Thank you.
When you think about insurance, just give me some feelings or some adjectives when someone is before you talking about insurance, life insurance in particular. What are your thoughts? Anybody? What is it? Protection. Security. Death.
Income replacement.
Income replacement.
Legacy.
Legacy. So there are so many different advantages to life insurance. It's not just a death benefit. Life insurance, depending on the kind that you choose, can definitely have living benefits as well. So, and when you think about insurance, basically, whether you're talking about automobile, homeowners, cell phone insurance, travel insurance, the common denominator there is transferring risk. Okay. You're transferring the risk of damage, the risk of loss. That is what you're doing with any kind of insurance. So today we're going to talk about life insurance. We're going to talk briefly about term, about whole. I can't tell you the number of times I've been asked, and other insurance professionals I know have been asked, what's the difference? Like, which one is better? Like, which one do I need? And sometimes I say the one that's better or the one that's best is the one that's enforced when you need it. Period. So, but those are two different types of insurance, and it really depends. It's an individual choice. But we will talk about those differences, and then we'll talk a little bit about supplemental insurance, which is not major medical, but supplemental, which helps to fill in the gap when you have when you experience a medical condition. And then lastly, we'll talk briefly about pre-need. Everybody say pre-need. Does everybody know what pre-need insurance is? Okay. I didn't for a long time. I did not learn that when I needed to have learned it. It's a very helpful tool. So we'll talk about that. So just real quick, insurance is a contract between an individual and a business that you pay a premium to, and then pays you a claim if you experience damage or loss. Okay, so we talk about insurance. The key components, we're going to talk about premium. Everybody say premium.
Premium.
Everybody say pay your premium.
Pay the premium. That's right.
Okay, premium, policy, claim, and deductible. Okay, those are 4 terms that you need to keep in mind whenever you are considering an insurance policy. So far, I know we just got started, but does anybody have any questions? This is so informal. If I say anything you don't understand, or if you had a question, before you came here, let's have it. Okay?
Let's do it.
Okay. So we will proceed. And we are praying that technology is on our side today.
That's right.
Let's see. And I believe it is. Okay, again, 2 types of life insurance, okay? So we have term and we have whole, okay? So term is just that. It lasts for a term. Some are 5, 10, 15, 20, up to 30 years. So it's temporary. It's good. If you need term, you may need term. Some examples where you may need term if you're a business owner, if you have a home, if you have a mortgage, if you have children in college, if you have debt, you may need term insurance because more than likely you can acquire a large sum of term insurance to take care of your debts or take care of your business if you were to pass away. Okay, that's very, very basic. Whole life lasts your whole life. Okay, so the premium will stay the same your whole life. That's why it's really encouraged to get whole life insurance or life insurance period as soon as you can, because life insurance is based on age and health. So you want to get life insurance ideally you would have wanted your parents to purchase you a life insurance policy when you were a baby. And you want to purchase your kids life insurance policies when they are children. But if none of that happens, it's still not too late. Purchase life insurance as soon as you can, because it's based on, what did I say? Age and health, okay? That's the bottom line. Now, sometimes, depending on where you work or if a company has, there are other situations where you have guaranteed coverage. And sometimes with the guaranteed coverage, there's a waiting period, but you can still get covered. There's a myth out there, and I have a list of, Attorney Sperling, if you could pass these out. I have a list of insurance myths versus facts, and that's probably one that's listed on there, that I'm too old to get insurance. You're never too old to get insurance, theoretically. I think most companies may cut off at 90, but even with that, there are some options for you. Ms. Lee, okay. There are some options for you. So you can take a glance at that while I'm talking. So as far as the term and the whole, is everybody clear on that? Let me just say a little bit more. Term insurance is going to be more affordable. Some people say it's cheap, but cheap is relative, but it's more affordable. The premiums may increase at a different band, after 5, 10, or 15 years. That's why it's very important to read your policy. Whenever you get an insurance policy, you must read the policy. And whenever someone is standing before you talking about insurance, you listen, and if you want to enroll, that's fine, but what you need to tell them, I tell all my clients this, everything I just said to you, you need to have it in writing. Whether it's an email or a booklet, an up-to-date booklet, or whatever you sign, you need to have that in writing. And I encourage you to sit down with someone that, if you don't understand it fully, sit down with someone you trust to go through those terms. Because when you sign for the insurance policy, that is what you're signing for. So you need to know and understand what you're signing for. Okay? So always get the information in writing. Even when you see television commercials and they say, $9.99, for insurance or what have you, if that's what you need to do, that's fine. But make sure you get that in writing before you sign up for that policy. That's very important. And then some people say, well, how much insurance do I need? I don't know how much I need. Well, like I said before, you want to cover your income. For example, if you make $100,000 a year, okay? If you make $100,000 a year and you have kids that are in elementary school and you know they're going to be dependent for the next 15 years or so, so you multiply that 100,000 times 15, I think my math is 1.5? $1.5 million. That's a ballpark of what you would need to cover your family just in case you were to not be here the next day. So that's a very quick example of how you calculate. So you want to add up your debt, and then add up your debt, and then times the time, put the time factor in, and that's a rough estimate of how much life insurance you would need for your family to be taken care of. So your kids can stay in the school, or they can go to college. Your spouse can stay in the home. They can maintain their lifestyle. So that's kind of a rough estimate of how the amount of insurance is determined. The amount of insurance that you need is determined. So let me ask you guys this. Have you ever, not being too personal, but have you ever known of someone in a situation that needed life insurance and did not have it? Okay. I'll go a little bit further. Have you ever been in a family of somebody that needed insurance, life insurance, and did not have it? Okay. So what happens then is they are depending on others to take care of what ideally they should have taken care of when they had the opportunity. So life insurance, some people say, oh man, I've done a lot of business enrollments, and some of the employees will say, oh man, what you're saying it sounds so good. I really need that, but I don't need anything else taken out of my check. And so I said, okay, I cannot make them enroll, but people think that it's so expensive. And again, expensive is relative, but nothing is more expensive than when you're sitting with a family and the loved one is no longer here and they don't have any resources to take care of their final arrangements. And that happens unfortunately, it happens more often than not. So you want to make sure you're able to take care of what you can take care of when you can take care of it. And a lot of people have insurance on their jobs, which is fantastic. It's great when your company offers you life insurance. It's a great benefit. And I would encourage you to, on Tuesday, when you go back to work, if you don't know, contact your HR person and ask, does the company offer life insurance? Is it whole or is it term? 9 times out of 10, it's term insurance. And is it portable? Now, the portable piece, you got to be careful. You might want to say, can I take it with me when I retire? Because you don't want them to think you're getting ready to leave the job. And I say that because some people, a lot of clients will have insurance on the job, and they leave the job or they're laid off, and they are headed towards retirement. They're in their 50s or 60s, and when they leave that job, they no longer have insurance. They no longer have insurance coverage. They've had it for 20 years, but when they leave, the insurance stays with the employer. So it's important to learn to know what you have. It is so important to know what kind of insurance you have and what it means for your financial protection. So do yourselves a favor. If you have insurance through your job, find out what you need, what you have, and find out if it is portable. Some plans are portable, but they're going to be term. So you just need to understand what you have. And let me share this too while I'm talking about insurance. As it relates to children, juvenile insurance is very affordable. Again, you would not believe the number of parents that don't have insurance on their children. And I've heard some parents say, oh no, I don't want to talk about that because I don't want to even think about, my child dying. I don't want to talk about that. And it's more than just a death benefit. Whole life insurance for children can be so beneficial. When I tell you that I have been in meetings, I have been at the table with, astronomical figures because somebody started a whole life policy on a child when they were 6 months or whenever they got the Social Security number, and now they're 25. And depending on how much they put in, they funded their college, they buy houses, they buy cars. They don't ever have to go to a loan institution, a bank or a credit union and tell all their business and have the people to analyze them. They just make a phone call and they draw from what's called cash value. Whole life insurance builds cash value. And it's cash that you can borrow. You'll be borrowing from yourself as opposed to borrowing from an institution. You borrow from yourself. You can pay it back. If you don't pay it back, it comes off the death benefit. If you have a $200,000 policy and it has $50,000 in cash value, and you want to borrow it for whatever reason, it's your money, it's your business, you don't have to disclose why you need it or want it. So when you take the $50,000, you now have a $150,000 death benefit, okay, until you pay it back. And when you borrow the $50,000, interest accrues on that $50,000. So you have to pay the $50,000 back plus the interest. If you never do, it just comes off of the death benefit. Now you have to read the fine print on your individual policy. I'm painting with a broad brush. But that's an example how people build wealth. Anybody ever heard of the Rockefellers? Okay. It would do you good to listen to an audio or just YouTube. But in a nutshell, that is one way that they built wealth. They built wealth. Whenever someone was born, they had a new child in the family, whole life insurance policy. They let it grow, let it compound, let it grow, let it grow. They did the same thing over and over again. I'm just summarizing that. But that is whole life insurance can be a very strong financial tool if used correctly. And if you get it, let it bake, let it cook, let it grow, and then you can take advantage of it when you need to. So did everybody already know that? Okay. All right. Good deal. So the takeaway from that is encourage your relatives to get whole life policies on the little children and pay the premium until they are sure that the children, when they become adults, will keep it going. Because you don't want to pay that premium for 20, 25 years, and then you give it to somebody who is not responsible and they let it go. That would be very, very sad. So, out of the myths and the facts, does anybody have any comments or any questions about that? About any of those? Okay. All right, good. Y'all are a good quiet class today. Okay. So we've talked about term, we've talked about whole. I'm gonna turn the corner and talk about supplemental insurance for a little bit. So supplemental insurance is just that, supplemental health insurance. It's not major medical. You know, most of us have our insurance cards in our purses or wallets right now. If you were to go to the doctor, the hospital, you'll take out your major medical card. So major medical is going to pay the doctor and the hospital. Okay? Supplemental is going to pay you. So supplemental fills in the gaps. For example, if someone had an accident and they car accident and sprained their ankle, broke their leg or whatever, and they went to the ER, there are supplemental accident plans that will pay a benefit for going to the ER after an accident. They will pay a benefit for certain x-rays or certain tests. And that money comes directly to you. You can do whatever you want to do with it. You can pay the co-pays or the hospital bills or whatever you want to do with it, but it's supplemental. And it's very important that if you have supplemental insurance, when you go to the doctor and they say, do you have insurance? You tell them about your major medical. You never mention supplemental because that's your insurance. That's a contract between you and the company. But if you were to mention your supplemental plans, then guess what? The hospital is going to get the check you were supposed to get. So that's why you don't tell them you have a cancer plan. It doesn't have anything to do with them. You don't tell them you have a hospital accident or a short-term disability. That's the contract between you and the supplemental insurance company. So those plans are very instrumental. I have several stories of folks who have been out of work for several months because they had an accident, and every month they received $1,000, $1,500, or whatever amount they selected every month in addition to their short-term disability at work. Because oftentimes at work only pays, I think, about 60% of your salary. So you definitely would need the other part of that. There's a hospital plan. If you were ever confined to the hospital, there are benefits that are paid out for you to while you're there. Daily benefits even if you were to select that particular plan. So these plans are this information I didn't always know. I just probably learned about 10 years ago. And I definitely could have benefited from some of these things. So my mission is just to empower people with information so that you can always make a better decision. And sometimes we've spent money, we've had experiences that we didn't necessarily have to feel the full brunt of because we didn't have the proper information or adequate information. So that is supplemental insurance, just in a nutshell. And I do have some brochures on the different plans. If you guys just want some for information, I can definitely get those out to you before you leave today. And let's see. Any questions so far? Yes, ma'am.
So this goes back to your first segment. We talked a lot about the statistics for having insurance. Can you speak to underinsured for life insurance?
Very good question. Okay. Did everybody hear? Did she need to repeat? They didn't hear you, Leah. Okay. Okay. So she was asking to speak to underinsured. Okay. So speaking to underinsured, a lot of times that can be almost like not insured. Okay. So for people who, you mean when they don't get enough in the beginning because it's not calculated. The amount is not calculated. Okay. So again, when you are considering insurance, you want to consider your debts. You want to consider your responsibilities. Sometimes there are a two-parent home. Sometimes there's one-parent home. But you want to make sure that you encompass all of what you're responsible for. Because when you're not here, then the people that you leave behind, they're left unprotected. And they're not going to be able to resume a natural or their normal way of life. So it's uber important, so very important too. And get second opinions. If somebody tells you one figure and maybe you don't have peace about it, you don't understand it, just get a second opinion about that because you want to make sure that you are insured at the right level. Like you can be underinsured, but you can also be overinsured. So you want to make sure that what someone is, what you're enrolling in, what you're purchasing is exactly what you need. Ms. Leah, did that address what you, okay. So you just want to make sure that you want to consider everything. And it's not a fast decision. It's something that you want to sit down and think about, and you want to write it out and make sure that you're well covered, okay? And also I'll add to that, whoever your beneficiary is or beneficiaries are, make sure that they know that they are your beneficiaries. Make sure that they have a copy of your policy. Don't put your policy, your only copy of your policy in a chest, underneath the bed, underneath the floor, nailed in. Nobody will ever find it. So, it's the wonderful world of insurance. You hear it all. So make sure that your beneficiaries and your family members as well know they have a copy of your policies. They know who's in charge whenever they need to be in charge. And it's no question about it. They know exactly what to do and when to do it. Yes, sir.
Yes, ma'am. Thank you. My question is in reference to using insurance as a tool for building wealth. So I was tasked with purchasing insurance policy for my mother and father because I'm their caretaker. But I got insurance at their later ages after pre-existing illnesses. So when I first purchased both of the policies, I was only in the mind frame to get enough for a burial. Is there a way that I can go back or use another company? We use a mutual Omaha to increase. So there's an opportunity to get outside of just burying them, enough to bury them, but opportunity to get wealth out of it.
Okay, so you want to know if there's an opportunity to go back to increase that policy or to get another policy?
Maybe to get another policy or increase that policy. Because I did get those policies based on what we was able to have a comfortable premium that we can maintain. But also I'm just looking to see if there are option or opportunities for us to say, hey, can wealth be built out of these policies even at their later ages? And that's like 69 and 78 right now.
Okay, so that's a loaded question. Okay, so I'm assuming it's a whole life policy? Okay, so now when you purchase that whole life policy, if there was a rider that maybe said you could purchase more insurance without proof of insurability, if you're looking like there's not a rider like that. Well, if there was a rider, if you purchased a rider at the time where you could purchase more without going through medical underwriting, that was one way. Typically, when you purchase a life insurance policy, you really can't go back and increase that contract because that contract is for that amount. You have to get another policy. So you could definitely purchase, if they're in great health, a good health, you could purchase another policy, or you could purchase another policy anyway. You'll be looking at, it just depends on what your budget is for getting another policy. They're 69 and 70.
78, yes.
78? Okay. There are policies available for 69 and 78-year-olds. And then what I'm about to talk about now is pre-need insurance. And so a pre-need policy would be where you actually, and a lot of people don't like to do this, but where you could meet at a funeral home, or you can sit down with the insurance provider, and the person actually picks out their funeral. And so I happen to know that some of those packages are, they start at $4,000, $5,500 on up. And so you pick out your funeral from the casket, service, who's going to, everything, you plan it. And so typically what happens is, this is just an example, if you pick out a $5,000 package, okay, and September, let's just say it's September, you're paying on it, you're in great health. If you were to pass away within maybe 12 months, then your beneficiary would get about 70% of that. But I think most pre-need policies, and please keep in mind, everything is individual. You have to check with that carrier. But I think most pre-need packages, the person has to live at least 24 months unless they're able to answer that health question, no. So if they're in good health, if they meet a certain standard, then it's effective immediately. And so when that person passes away, they have a pre-need policy, everything is paid for at the funeral home. So any insurance that you have is just for the beneficiary. Any insurance death benefit is paid out to the beneficiary if you have that pre-need policy in place. So that may be one way that you could maybe, generate some wealth from those policies, because of those policies that you have. But you could definitely get another policy on both of your parents. And I was thinking about myself when you said that, because when I moved out of my parents' home, I got life insurance policies on both of them, although they had policies, and I don't know if they were retired. No, they weren't retired then, but they had life insurance policies. But I got life insurance policies on both of them for my peace of mind, just in case something happened to them. So I did the same thing that you did. So did that answer your question? Okay, thank you for that. Anybody else? Okay, I'm going to talk just a little bit more about, how am I doing on time? Okay, I'm going to talk a little bit more about pre-need. It's something that I wish I had known more about it sooner, because it's really a great way to protect your final wishes. I mean, the person is right there picking out what they want, so that's what they wanted. They picked it out. More oftentimes than not, it's paid for, and if you're in great health, it's effective immediately. So it would allow for any life insurance policies that person has in place for the death benefit just to be paid out to the beneficiary. So there's nothing that you'd have to pay for. I mean, the cemetery, or however they want to take care of their final expenses, that of course would be incurred, but it would allow for that death benefit to be paid out from those other life insurance policies. And pre-need is just, it's very simple. It's just what I said. You go to the funeral home, You pick out everything, you sign the contract, and that's it. So did everybody already knew about pre-need? Who already knew about that? Okay. Do what now?
I have a pre-need burial plan.
Uh-huh.
I have with Valhalla.
Yes, ma'am.
The only thing I didn't include in it was my coffin. I could go back and include the coffin.
Okay. You said the
But
only thing you did not?
Uh-huh.
Okay.
The deposit's paid. I just paid it. in full.
Okay. But you need to go back and include the coffin.
Uh-huh.
Okay. That's great.
But for where she estimated, I'm just paying as much for getting the coffin. These are deposits. You got to pay for the care and everything. I didn't know that.
The what now?
You got to pay for the care and the digging and the maintenance of the.
Okay, so you paid for your policy at Valhalla and also at the cemetery.
Yeah.
Okay.
And now I wanted to just to get the coffin. After that, just the coffin. You pay for the coffin, but you got to pay for the maintenance and I guess the people doing the work. I don't know.
Yeah, so cemeteries are different. All cemeteries are basically different. So, but you did a good thing by doing your pre-need. That's fantastic. That really is.
Can you walk us through like an application process if someone wanted to purchase a policy from you or wanted to engage someone else or preferably you in the sense of a policy? What does that look like? Is it where you send them a link, they fill out an application, it takes a couple of days, a couple of hours? Just walk them through some of that.
Sure. So if someone were interested in getting a policy, life insurance term or whole, supplemental or pre-need, ideally what I like to do is set up an appointment. And prior to the appointment, I like to ask you to gather your health information, gather any kind of all of your medications, your next of kin. There's a checklist that I will go down before we would meet, either in person, on the phone, or Zoom, whatever's comfortable for you. And when we are together, we will go over. We will talk about why you believe that you need this insurance policy. Why do you need it? And based on that, then we could look at some numbers and see about how much you think you need or how much let me say this, what you think you need and what you can afford, those are two different things. You want to make sure they meet and they match. So what you think you need and what you can afford. And then the application process, and I tell everybody this, it is so important that you are honest to the best of your knowledge. Not saying anybody wouldn't be honest on purpose, but you have to be honest about that, because if something happens to you, most insurance companies, they're going to look back 2 years to see if you were telling the truth. They're gonna look back 2 years. So make sure, like, if you just stopped smoking last week and you said you haven't had a cigarette in 7 days, yeah, so you got to make sure you're honest. And the application process is your personal information. They're gonna ask health questions depending on if it's a guaranteed issue plan. They're not gonna ask health questions, but there are gonna be a ton of health questions. And either I tell my customers, either I can ask you the questions. If you don't feel comfortable, we can have someone from the company to call you and ask you the questions. That may be better. You might not want to tell me all of your business, and I understand that. But there'll be health questions involved. And that's the biggest thing, because that's going to go through underwriting, and they're going to determine based on your health. They're going to determine what rating to give you. And sometimes, unfortunately, they will determine whether or not they deny or approve your coverage. So once the application is done, is submitted, I tell folks, anywhere from 5 to 7 days. Typically, I know sooner than that. And as soon as I know, I will let you know. But that's it in a nutshell. But I really like to have people I like to talk to folks and just understand why they think they need insurance, because you don't want to be oversold on insurance and you don't want to be undersold. You want to make sure you get as close to the number as possible to the amount of insurance that you need. So, yes, ma'am.
It was a good idea too. I looked at the class. If more young people would really get into this class, because the younger you are, the cheaper your premiums are. As you get old, it's gonna be higher.
That's true. That's very true. She said that she wished more younger people would get into this class or a class like this because the younger you are, the cheaper, the more affordable your premiums are. And I tell everyone that, you know, your monthly premium on an insurance policy can be less than what it costs to go through the Chick-fil-A line. Or, I'm sorry, I don't mean to give free advertisement, but to go through a fast food line. Because you go through a fast food line, you may pay $15. And so you can get a term insurance policy, depending on your age and your health. You may be able to get that for $15, $20 a month. So people don't understand that, they don't know that. And one of my missions is just to inform people, to educate them, edify them with this information that's out here about insurance. So thank you, Ms. Atkins, for that. Anybody else? Did that answer your question, sir?
So you're saying through the application process, share with everyone your number, your email, or how would you like for them to contact you?
Sure, and I will say this too. I will say that the Holy Spirit told me 3 times. Somebody say 3 times.
3 times.
Gina, get your cards. Gina, get your cards. And I did not. I said, okay. And the 3rd time I said, ooh, that's the 3rd reminder. Let me go. And I went upstairs and I did not get my cards. So I can share my information if you all want to write. I will definitely bring my cards and have them available next week in the bookstore. There'll be a display in the bookstore as well, but I will give you my phone number. Guys, just let me know when you're ready. And it's Gina. It's Jeanna, but it doesn't matter. You can. So it's 205-960-9871. And you can call or text that number. And we'll go from there. I also want to, Attorney Sperlin, if you could help me out once again, sir. I want to pass out life insurance checklist. Okay. So this will help you. This list will help you to assess your needs, help you how to choose the right policy. It talks a little bit about the application process, maintenance and review, and then a little bit for business owners. I will say, as I said earlier today, I think maybe a couple times, if you have life insurance, know what your life insurance is, know what it means, do maintenance, get a review, get someone to sit down with you and make sure you understand what it is that you have. And I think we were talking earlier about assessing your needs, calculating the coverage amount. You can use the DIME, D-I-M-E method, debt, income, mortgage, and education, okay? So I didn't mention this, but I will in closing. If you have a mortgage, if you have a $300,000, $100,000, $50,000 mortgage, if you have a mortgage, it is so important to have mortgage insurance. Now, the lender's gonna offer you mortgage insurance. I should let Attorney Sperlin tell you about that, but about mortgage insurance from a lender, but I'm talking about mortgage insurance in the form of a life insurance policy. So if you have a home and it's, your balance is $50,000 or $75,000, well, that's a great starting point, because you already know if you were to pass away, you want your family to be able to remain in a home, pay the home off. So consider that. That's in the DIME method. And the last thing is education. So I know we've talked about a lot. I have handouts on everything that we've talked about. And thank y'all so much for the questions. Are there any more questions or comments anywhere in the room? Yes, ma'am. For mortgage protection? Yes, ma'am. Listen, what I'm talking about, they call it mortgage protection, but it's a term life insurance policy or an insurance policy. So if your balance on your house on your home is $100,000 and you were to pass away, ideally, it would be great if you had a life insurance policy equal to $100,000 or greater, so that your dependents could pay off the house, pay off the home. Does that make it clear? Yeah. So, okay. But that mortgage is included in all the debts. So you want to make sure that you have at least $100,000 for the house, but you want to consider the vehicles or credit card debt, or if somebody's in college. So all of that's how you calculate the amount of insurance that you may need. So I tell you, sometimes when people say they have a presentation prepared and they don't really go by the presentation, yeah, it can be a little challenging. But I hope that you all got something out of it, and I hope that I was informative. Yes, so good. So I would just challenge you and task you with just sharing this with your loved ones, with your friends, just asking casual, hey, do you have life insurance? Hey, talk to somebody about life insurance. If you have pre-need, talk to somebody about pre-need. You can go to any funeral home. You can contact an agent. They can guide you through that. But most funeral homes, they have pre-need agents on site. And it's a wonderful financial tool to have, because that part of it is already taken care of, and your loved ones don't have to deal with that. So again, I have handouts available. Y'all can see me afterwards, and there'll be a display set up in the bookstore next week. And thank y'all so much for coming. I'm excited to see everybody. Thank you. Thank you. Thank you.
Very good. Put your hands together for Mrs. Deeds, please. Thank you so much. That's an awesome presentation. I'll leave you with this. Here are 3 primary reasons why people typically don't have insurance based on this research. Number 1 is perceived costs. Everyone say perceived costs.
Perceived costs.
And I think she addressed those myths wonderfully. That was just very good. And some of the perception of costs that she said earlier is the cost of what you may go through a fast food line. So don't allow the perceived cost of insurance to intimidate you not to consider it. Then the second one is a lack of awareness. And she nailed it, which that's what you're here for. You're called to give people an awareness, a sense of understanding and knowledge. Then the last reason there's a gap between disparities of races with insurance is the competing financial interests. Do I pay life insurance, or do I pay house insurance? Do I pay car insurance? Do I pay tuition? So you have to really take a very selfless view of insuring your life, knowing that those benefits are going to go to someone else. And so with that, I pray that you were blessed today by the information, those of you here in the sanctuary. And once again, for those of you who are visiting with us online, we want to thank you and welcome you again for encouraging this information to be received by you virtually. And so with that having been said, Ms. Deeds will be in the lobby for a few moments after today's session, and she will answer any other questions you have that are more personal versus in this type of setting. And if you have questions, please feel free to type those into the chat and get a response back to you. God bless you, and thank you. And on behalf of NLIM and CRCC, we want to say enjoy your Sunday.